Hi there, welcome to my YouTube channel. So today I'm going to talk about the key indicators and oscillators that investors should actually track to make money in the stock market. So I'm going to actually talk about four of them and then highlight one which I think is one of the key indicators to measure success of a stock in the stock market. Now, having said that, the disclaimer here is that, well, there is no one indicator which is absolutely perfect. So which means if you track just one, you are on the safe side. No. So even the one that I'm going to talk about today requires you to use other indicators that I would also talk about at the beginning of this presentation, which you need to track as well. So that's the key message that will go out to you in this particular video. So before we dive in, please like my videos, please subscribe to my channel, please smash that notification bell so that you know every time I upload a new video. Please comment on my video so that so I know what kind of videos a researcher looking out for from me. And also share my videos with people who you think would benefit from my research, from my insights, and from my videos. So before further ado, let's dive in. So first things first, as you know, I have an ebook. It's an ebook on my journey as an entrepreneur. It's titled Six-Figure Corporate Job to Master Entrepreneur. It talks about the time back in 2010 when I decided to quit my jobs before I actually took the decision and informed my company. What were the steps that I took? How I prepared myself to embark on the entrepreneurial journey. And it also talks about the challenges I faced and how I overcame those challenges. So this ebook, what I've also done is I put down 3 worksheets. Now these 3 worksheets are essentially it's a measurement of your mind and how you think. Now that is very critical for an entrepreneur. So you could score yourself in this particular in those 3 worksheets and see where you stand and how close or far you are from becoming a successful entrepreneur. The cool thing is I scored myself based on my mindset back in 2010, and you would see how much I've scored and how successful I have been with 2 companies, one in Singapore, one in India, and representations in the US markets. So the way to download this ebook, by the way, is absolutely free. You could download it from my website. The URL is flashing on the screen. I'll put the URL in the description box below. All you have to do is to click on it, then go onto this page, put down your name and email address, and the link to download the ebook will be emailed to your inbox. I hope you like the book. Please do give me your feedback on this ebook. Now let's dive into the topic. First, let's try and understand the top indicators and oscillators that typically traders use to track the stocks, decide on what to buy and what to sell, and when to buy and when to sell. The first part is that there are hundreds of such stock market indicators and oscillators that most investors and traders would be using, but there are only few which are really give you the right direction. And these are, the first one is stochastics. So this particular indicator measures the relationship between an asset's closing price and its price range during a particular period of time. Now this is on the assumption that the closing price is always likely to stay on the higher side at the end of the day range during an uptrend and reverse during a downtrend. So hence it's important to track it based on the price during a certain period of time. So it tells you how long that particular trend has been, whether it's an uptrend or a downtrend. The second has been commodity channel index. So this essentially fluctuates between minus 100 to 100 plus 100 levels. Now technically there is no upper or lower limits, but that's where it fluctuates. So when it remains within a certain normal range, that signifies that there is a lack of strong trend in the market, and that signals that the asset price will likely remain in that range, and it's not going to is neither going to go up nor it's going to go down. The third is quite a critical one: moving average convergence divergence, which combines two moving average crossover with histogram to gauge the strength of a momentum. I'm not going to go into too much detail on this particular indicator, but I can tell you this is a very critical indicator. The fourth one that I'm going to talk about here is the oscillator, which measures the difference between the latest 5-period simple moving average and 34-period simple moving average. So that's essentially to get a reference on where the stock is likely to move, whether on an upswing or a downswing. Again, this is plotted as a histogram. So these are the four main indicators and oscillators. But there is one more, which is equally crucial, and that's a key one. And that is RSI, which is a relative strength index. Now let's try and understand what it is. In simple words, RSI tells when a stock is overbought or when it is oversold, and may even reverse. So overbought basically means when a stock makes an extended move to the upside and is trading higher than the fair value. So that's an overbought stock. Oversold stock, conversely, is when a stock makes an extended move to the downside and is trading below its fair value. So critical points here. Now, let's try and understand when the RSI rises to 70 and above, what does that mean? So RSI must be 70 or higher or remain above that level to generate an overbought signal. So the statistical measurement of 70 and above will mean that it's an overbought signal. Whereas, and just because a stock is overbought doesn't of course mean it will reverse immediately. There is no such guarantee. Do not use RSI to time when the market may reverse. Instead, use it as a guide. So there is no guarantee that if it's on a overbought or oversold mode, it doesn't mean it's going to reverse. It can reverse. It technically can reverse, but there is no a confirmation that it will definitely reverse, and there is no time given or decided when it will reverse. Now, when RSI falls below 30, what does that mean? When RSI falls below 30 or remains below 30, that's an oversold signal. Very clearly, 70 is overbought, 70 and above, and 30 and below is oversold signal. If RSI drops hard and fast to 40 from 69, for example, even though it may not drop below 30, that hard and fast plunge is a signal that the indexes may rally because the market is oversold. So here you see that even if it's dropping from 69 to 40, there is a very high chance of a reverse if the market is oversold. So that means the trade is high, the index is going up. So you see this could be a chance for a reverse. But let's say if the market is staying even, then it may not reverse. Or if the market is going down, it may or may go down. It could be oversold, or it could even bounce. It could even be overbought. So those are the elements that you should keep in mind when you use RSI. Now, let's try and understand what are the limitations of RSI. First, it's not perfect. So what does that mean? Sometimes certain stocks will remain overbought at 80 or 90, not for days, for weeks, but for months. It remains there, despite the market or the index going up and down. So what does that mean? So it's not a perfect, it's not 100% perfect indicator, but it is a very, very important indicator. The longer the stock remains overbought without reversing, the less effective the oscillator becomes, because the oscillator is unable to gauge when the reverse is going to happen. And it's so which means that at that point in time you should just use it as a guide, but don't make a decision based on the RSI entirely. So that's the learning here. Like many indicators, RSI is not as successful in the low volatile market environment. So which is true for many indicators. RSI can also give false negatives and false positives, just like other indicators. To cut down your margin of error, combine RSI with other indicators. So you see, I've been harping on this particular point that you must combine RSI with other indicators. And which is the most important key indicator after RSI is MACD. So we spoke about MACD. So you use that. That is the second indicator that you should use, and then go on to use the others as well. So the learning here, the summary here, is that it's not just one indicator that you should rely upon, but you must understand what each of these indicators show. What are the interpretations that are thrown out when you use those indicators? And you must also know what are the indicators, how two indicators can actually, two or more indicators can actually give you a better direction of the market or of a stock in the stock market. So you must be smart enough to be able to handle multiple indicators, keeping the key indicators in mind, and then base your judgment or your decision to buy or sell a stock. So that's the key message and the summary of this particular video. So I keep harping upon a video that I did on how do you invest like a pro in the stock market. I'll put that video in the card above. Go take a look at it, because it talks about some aspects of investment which all investors, especially beginners, if you are one of them, must consider. So that's it, guys. Well, thank you very much for listening to me. As you know, my name is Saurav Mukherjee. I'm a digital and technology marketing leader with over 20 years of global experience. I'll put down my link to the URL in the description box below. Click on it and go ahead and connect with me. I regularly work with clients where I try and find solutions to their business, marketing, technological, and investment challenges. If you're looking to engaging me as your consultant, please drop me a line on LinkedIn after you've connected with me. Message me on LinkedIn, or you could drop me a line on the contact page of my website. I will put the URL to that contact page of my website in the description box. Then we'll figure out how we can connect with each other. Maybe jump into a conference call and see how we can work together. Well, finally, again, please like my videos. Please subscribe to my channel. Please smash that notification bell. And please comment on my videos and share my videos with people who you think would benefit from my knowledge, experience, insights, and my videos. So until my next video, please stay safe, stay healthy, and I shall see you soon. Bye-bye.